You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. Well, hey, what can you say about these precious metals markets? It's like, where are they heading? What are they going to do next? Why are they going down, at least in dollar terms? And why is the dollar going up? What about inflation? How can the dollar be going up when it's being inflated away to nothing? Well, let's talk with our good friend and colleague, Andy Schectman from milesfranklin.com. Andy, it's great to have you back on the show yet again. And the big question on everyone's mind is, how much lower can precious metals go?
Good to see you, Kerry. Good to be back. Appreciate it. Yeah, I guess I can go lower. I mean, they're already defying logic in many respects, but I think it's important to take a look at a big picture. Let's start with the supply from the top on down. And when we get to the on down part, I'll tell you, I don't know that I've ever seen a market like this in my career, which is now 33 years in length. But let's start at the top. Over the past 5 months, since the end of April, almost 550 tons of gold has been removed from the London Metals Exchange and the COMEX market, this according to the London Bullion Market Association. At the same time, we've seen massive amounts of gold taken off of the exchanges in the West. We've seen a 4-year high in exports to China. And you're talking, the data we get is a month or two behind. So the August figures showed a 4-year high in deliveries and exports into China. So you have massive withdrawals off of the Western exchanges, massive deliveries at the same time to Asia. Don't like that trend. Since silver squeeze, a year and 4 or 5 months ago, we've seen about 115 million ounces of silver taken off the COMEX market. Now, that may be hard for people to put into context, but understand that not only has the LBMA lost more silver in the last few months than the COMEX has available for delivery, the COMEX only has 40 million ounces of silver for delivery, which is 3 times less than what we've seen delivered off of COMEX in the last year, and less than what has been delivered off the LBMA, the London Bullion Metals Association, in the past several months. The price setting mechanism for the world is very close to its all-time lows in registered category silver. I think the low of all time is 20 million ounces. So we're about double that right now at 40 million. But the cupboards are really quite bare. When we talk about high premiums, which I'll get to in a moment here on this side of the table, it's not immune, Kerry, to retail. According to PAMP and PAMP, PAMP Swiss, they're a massive refiner, one of the most high quality products in the world. And but yet they publish some information, some data about what is flowing in and flowing out of the major exchanges of the world. They say that gold in Dubai, in Istanbul, and on the Shanghai Gold Exchange is at multi-year, if not all-time high premiums to the London benchmark spot price. So you have massive premiums above and beyond the London fix, is what it's saying, to get product at the very highest levels in the world. At the same time, we're told by a consultancy, Metals Focus, I always get that one wrong, that silver is trading at triple the premium that it normally does in India. And so by over $1 more than ever. So you have high premiums in India, and India importing large amounts of silver. So at the very, very top, we see more silver being drained and gold off of the London Metals Exchange, the COMEX. We see 100 million ounces taken out of SLV by the authorized participants in the last 4 months. We see the lowest level of silver in the history of the London Metals Exchange since they started keeping records. Massive drawdowns of gold. And that's not just in the West. We see the same thing all over the world, as they're saying in Turkey and in Dubai and in Shanghai. Metals are becoming hard to get now when we look at what's happening here, knowing that everything trickles down from the big exchanges, because the bars that the COMEX good delivery bars, 1,000-ounce bars, or the 400-ounce LBMA good delivery gold bars, these are the items that are used to make the coins. You buy the big bars, you turn them into planchets, and you make coins out of them. Well, in looking at one of the largest distributors in the world, I'm not going to mention their name, but they're one of our supply sources. They're one of the very, 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 very largest distributors in the world. Every single item that they have on their inventory sheet, about 90 items between gold, silver, and platinum, almost every one is sold out. Literally almost every one. They have 1,000-ounce silver bars in limited quantity, silver shot, which is grain, BBs, in limited quantity. Only 5,000 silver 2023 UK Britannias per customer. So if you're a company like mine buying from a distributor, our typical purchases are 50 or 60 or 75,000 coins, not 5,000. In gold, they have virtually nothing. And they say until 2023. So when you're talking about the exchanges, when you're talking about the wholesalers, when you're talking about the retailers, supply is as stressed and strained as I've ever seen it, with the exception of 2008, when it was just flat out gone. Now, I've been saying this was coming for years. I got a lot of heat for it. People give me shit for saying, oh, you're just talking your book. I have never seen anything like it. And this is still at a period of time, Kerry, where most people that you would call your lifelong friends still wouldn't know gold eagle if it fell on their foot. When the mainstream wakes up to needing metals, there will be none left if it's anything like it is right now. And the way to tell if this is going to continue into the next year will be to look at the 2023 pre-order prices of gold and silver eagles. Because right now, my cost on gold eagles is around 10% over spot before I make a penny selling it to the public. My cost on silver eagles is like $15 over spot before I make a penny. So if we see a continuation of that in the pre-order for 2023, we'll know that this is just more of the same. And it's something that has me rather concerned, because the biggest issue we have is not getting clients. It's maintaining an inflow of product. It's just getting harder and harder and harder to get.
Wow. That is incredible. I mean, we've been expecting these supply disruptions, shortages for a long, long time. You can still buy metal when you go to it. The only time I remember where you couldn't buy stuff was that squeeze that you referred to.
Oh, wait. Yeah.
Yeah. That was the one. And then we had the recent one, the silver squeeze thing, but that lasted for a couple of days, right?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Right. And, and everything flowed back in as normal. What's different now over both of those examples is that you have worldwide, I think, recognition of massive inflation. I mean, look in the UK. Aside from the fact that their pension system almost blew up and their bond market almost blew up, and the Bank of England had to come in and pivot and do QE again, gold is at all-time highs against the pound. So you got a country like the UK who's awash in inflation. The Eurozone around them is a basket case. Their bond market is imploding. Their government's signaling inflation and all-time or inflation and moving away from, rather, normalizing their balance sheet, which is probably what the Fed is going to do. In other words, a pivot. Gold is at all-time highs there. Because the dollar is so strong, we don't see that here. And to your point, yeah, the dollar is strong because everything else in the dollar index is crap, and yet its relative strength here is nothing. I mean, it's so expensive to go out to dinner, to the grocery store, or wherever. The dollar is losing its purchasing power, yet it's at all-time highs. And everyone around the globe sees this because commodities are at all-time highs in those other currencies. So you have all of the globe competing for gold and silver when they never did. Before, we had all of the gold and silver from the mints around the globe flew to the U.S. No one wanted it back then. The U.S. were the consumers of it. The West were or the people in this country were buying metal when people in the U.K. and Australia and Austria, they didn't care about the coins that their governments made. Hardly at all. They were buying treasuries and U.S. securities, and everything was hunky-dory. Now it's not. And now everyone is aware of inflation and war and chaos and currencies debasing. And so you have way more competition chasing and way more money with all the money that's been created, chasing way less in the way of product. So, yeah, I think that this time it's different. It's very real.
Yeah, it seemed a lot more real to you and I all this time than anyone else. But I guess maybe the world's catching up here, Andy.
I think so, Kerry. I do, and that's what's different, amongst other things, is that you have competition for product, and you have to realize that there's two major mints in North America: U.S. and Canada.
Right.
You got Australia, Austria, South Africa, UK, all across the Atlantic, and all of these countries are experiencing problems like we are, maybe worse. In Australia, for sure, in the UK, for sure, and the Eurozone. I mean, and that comprises those mints. South Africa, maybe a little bit different, but look, bottom line is that there is a greater awareness, and yet the awareness hasn't really expanded into the mainstream. This is why I say it will be defined, this market, by an inability to easily source product. And like most of the things that I've talked about, I'm early, and being early is a curse, and sometimes it's a blessing. And in this case, I'd rather be 6 years early than 60 seconds late if you can't get anything and you need it for whatever it is that's coming down the pike.
I couldn't agree with you more. The inflation really, we knew it was coming. Everybody said, no, you're crazy. Inflation's not going to happen. Blah, blah, blah. They all tell you, oh, you know what? It's the velocity of money. It's too slow. Can't happen, right? That's what the argument I got numerous times. And yet, it seems to be the velocity of money hasn't done anything, but the value of money certainly is plunging.
Well, and when you talk about inflation, it's important to note that in 1980, as an example, when you had inflation at 13+%, Paul Volcker, maybe the last politician with any courage, raised rates to 20%. And even in that environment, now, first of all, let's say that guys like John Williams from Shadow Stats will tell us that our inflation right now is even higher than it was in 1980. If in 80 they had a real metric and they stripped out food, energy, and housing for the metrics. Now he would say our inflation is 16, 17%. But to give you an idea, in 1980, when Volcker raised rates to 19.75% on the federal funds rate with 13% inflation, it took 5 years with rates that high to get inflation back to 4%, and then another 10 years to get rates down to their 2% target. Mm-hmm. So if you think we're anywhere near getting inflation in control. It's not. And here's from the you can't make this up category. Do you know, based on info that was just released last week, that the U.S. federal government repaid $15.7 trillion in worth of bonds in the most recent fiscal year? Now, how the hell did they do that? How can you come up with 15
right?
Well, they just bought. That's right. They borrow more to pay. It's like paying off one credit card with another credit card. But the interesting thing about that, Kerry, 2 years ago today, basically, the interest rate on the 2-year Treasury, and Janet Yellen says she wants to focus on short term, not issuing these long-term obligations. So most of the debt that's being sold now is under 10-year maturity. But 2 years ago today, in 2020, the rate on the 2-year Treasury was 0.012%, not even 0.1%, and now it's over 4%. So the cost in rolling those bonds over has become exponentially more expensive. You want to talk about inflation? The bottom line is simply this. It is the ideal of every government to print as much money as they can while keeping inflation in check. And how do they do that? They do that by lying about the numbers and the metrics. And this is exactly what they are doing. And when you're talking about rolling over $15 trillion worth of bonds in 1 year, the obligations are beginning to really create a problem in a rising interest rate environment. So yeah, buckle up. Things are getting very interesting. And this is why it's never been more important to stop focusing on the micro and focus on the macro. Don't look at what the market does day by day. Not only is it manipulated, it's schizophrenic. And the big money is using strength in the equity indices to sell on strength. It's one of these deals where you've got to take a step back, look at the mathematics, look at what's happening globally. And I think now more than ever, kind of mitigate your exposure to the dollar and traditional assets, traditional investments, because something wicked this way is coming.
Yep, agreed. And I think the plunging metals prices are a symptom of it. You're going to find out soon enough that you should have done this a long time ago. Hopefully it won't be too late. You know my position on it. And I really appreciate your coming on, as always, Andy.
Always.
Tell us how we connect with you. How do we buy metal from you?
I've been saying for the last couple of months, our website is almost ready. It's almost ready. Our new website has been a series of disappointments and setbacks. We're very close to releasing it with limited online purchasing availability, more transparency in pricing and whatnot. In the meantime, please send us an email until it's up and running. It's going to be, if it's not up by Thanksgiving, someone's head's going to roll. But I'll simply say this. Send us an email at info@milesfranklin. Say Kerry Lutz sent me, or the Financial Survival Network, in the subject line, and we will send you an updated inventory. We'll answer any questions you have, put you in contact with myself or one of my brokers who I have personally trained every one of them, and make it a good experience. Try to get you the very best price in the country and be very transparent about what's going on with delivery expectations, with inventory, with price, the whole 9 yards. We just love the opportunity to work with your listeners. And it's certainly something that I take very seriously, Kerry, not just calling you a friend, but a business partner in some respects as well. In this case, a partnership of my promising to treat your listeners as family, and just a great appreciation for being here again today. Look forward to do it again soon.
Same here, man. Always appreciate it. You got a question for Andy? Shoot me an email, kl@kerrylutz.com. The link to Andy's site is in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. Andy, we'll check in with you in a few weeks, see what's happening.
Look forward to it. And as always, if something pops up and we need to do an impromptu get together, I'm just a call away. In the meantime, I hope you and everyone out there stay well.
You too. Thanks.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.